Some lenders will even accept crypto.
Really?
Yeah.
I didn't know that. Hey guys, today we're here with one of the top mortgage brokers in Los Angeles, who happens to also be my younger brother, Brian Asheghian. Brian, thank you for being here with us today, coming 30 feet across from your office to my office. I appreciate it.
Thanks for having me.
If, let's say, a buyer is buying their first deal, multifamily asset, rent-controlled asset, in a B or better location, let's say around a $2 million deal.
Yeah.
Right?
Yeah.
What is the most important thing that they should know? What does a lender look for them to be able to borrow, and what kind of LTV, would that look like in today's market?
Yeah, so for a first-time buyer, unfortunately, the first thing they're going to try and figure out is the level of experience.
Right.
You can overcome that by hiring a management company, for example. But they want to make sure that the property is stabilized, that it's cash flowing, that it's a good investment. And they want to make sure that the borrower has the right amount of net worth, a net worth that's high enough, liquidity that's high enough for this loan. And they want to make sure that their tax returns are solid, that they're cash flowing.
So for like a $2 million deal, you're saying net worth and liquidity. What does that need to look like?
So the net worth needs to be at least equal to the loan amount or higher.
Okay. So if someone is getting, let's say, a 65% loan, you're talking about a 1.3 million in net worth.
Yeah, if that's the loan amount, but ideally you want it to be higher than 1.3 million. Yeah, like equal to or higher than, and your liquidity needs to be at least 10% of the loan amount post close.
Post close. So after
your
the
down
closing,
payment,
they still need to have, in that situation, 130,000 liquid.
Yeah, and then I would tell a client between 150 to 200 just to be safe.
So some sort of buffer.
Yeah.
And that can be in liquid assets, which is cash, stocks, anything that they can turn to cash quickly.
Yeah, exactly.
Perfect.
Some lenders will even accept crypto.
Really?
Yeah.
I didn't know that.
As liquidity, yeah.
Okay, so it's end of 2025. At the beginning of last year, January of 2025, I think people tend to forget, but where were interest rates on, let's say, multifamily products going into 2025, January of 2025?
Yeah, going into 2025, the rates were actually in the mid sixes, the mid to low sixes. So anywhere between 6.25% to 6.5% for a competitive rate.
Crazy. And today
they're around 5.5%. I can get you a loan right now, at least the loan amount's at least $2 million or above. I can get you a rate of like 5.45, like up to 60% LTV.
Wow. So we're talking about 100 basis points difference.
Yeah.
In 12 months.
About 100 basis points, 75 to 100 basis points difference. Yeah.
That's amazing. Going into next year, I know you're pretty on top of the Fed meetings and what's happening. Do you expect a cut before the end of the year? Do you expect any cuts coming up next year? We're not going to hold you to it, obviously, but what's your gut?
You can hold me to it.
What's your gut feeling?
You can hold me to it. Polymarket and call sheet today said that there's an 84% chance that there's going to be a rate cut.
Wow.
On December 10th.
Wow.
And then I checked the futures as well for 2026. What I think is going to happen is Powell will not cut any rates at the beginning of 2026. In May, he's going to step down because that's just his time to step down. They're going to hire a new Fed chair in June. And then the guy that Trump appoints in June, I think he's going to cut rates about 75.
Right away. First day.
I think first day, 75 basis points is going to cut rates.
First day.
Yeah.
Why is it a benefit for a borrower to work with you?
Just because we can get them the most competitive financing. I mean, that's the point. We want to show that we can add value. If we can't add value, then we're not going to get paid. So the first reason is because we can add value, we can get them the most competitive financing, and we know how to navigate the deal correctly. Right. So they send us all the information, we review it, we help them fill it all out correctly, and then we submit it to the bank. So because we have a lot of experience working with these banks, they'll make sure to go out of their way to make sure that the deal does get closed. Like, they care about closing deals with us because we send them so much business.
Right, and execution is big.
That's the most important thing. It's all about execution.
Especially in today's market. People just say, this rate. And then last second, a lender will retrade you.
Yeah.
And if you don't have someone with experience to help you out to navigate that, they're going to be paying for it at the end.
Yeah, exactly.
Right? Any recent deals that you've done that you think, is worth sharing, where you really helped a client that you want to share with us?
Yeah, sure. Just the last deal that I closed, I had a client who purchased two properties, both of them this year. He renovated the assets. He turned over like 80 to 90% of the units. And from that perspective, as an owner, you want to cash out as much as possible.
Right.
The problem is a lot of lenders, they have loan to cost restrictions, especially in the first year.
Right.
In the first year, they won't even look at loan to cost. In the first year, I mean, they'll look at loan to original purchase price.
Correct.
That's in the first 12 months. Then from 12 to 24 months, they'll look at loan to cost. This guy bought the deal less than 12 months ago.
Wow.
He wanted to cash out. We got him a loan, 5 years fixed, 5 years interest only.
Great.
No prepayment penalty, and no loan to cost restriction. So we were able to give him probably $1 million more than he would have with his own bank.
Wow. Great. Well, Bri, thank you so much for your time. Really appreciate it. If you guys have any questions about the debt market, if you're looking to get financing on an acquisition or a refinance or construction or bridge debt, feel free to reach out to Brian. You can reach him 310-922-1068. I always mix it up with my number.
Yeah.
And yeah, feel free to reach out if you have any questions.
Perfect. Thank you.
Thank you.